Well, for the last few months, economists have predicted that the recession is in its final stages. Here to speak with us today is the top-ranked forecaster, Brian Westbury, chief economist of First Trust Advisors. Brian, welcome to Bloomberg News. Good to see you again.
Hey, great to be with you, Mark.
Brian, your general view of the economy right now with some of the indicators and internals that you're seeing, what's your sense here?
Sure. You know, for the last couple of months, we're one of those forecasters that expected the economy to bounce back. In fact, we're looking for a V-shaped recovery. And, boy, today's ISM, Institute for Supply Management Manufacturing Index, it sure looks like a V. If you look back, we had a panic late last year,
right,
and now we're coming out this year. It looks like it's happening in lots of data.
Brian, did today's ISM number surprise you?
No, we had forecast of 49. It came in at 48.9. I guess if there was any surprising part, it was the new orders and production components of that index, which really shot well above 50. Those looked very, very good. But altogether, they look like a V-shaped recovery.
Brian, why V-shaped and not pick another letter of the alphabet that we've been hearing?
Yeah, Mark, just for reference sake, an L-shaped recovery, that's not a recovery.
Right.
That's a flat line. A V, and a V-shaped recovery because we had a panic last year. We had a panic that took the economy down. By the way, we haven't seen a panic like that in 100 years. Not since 1907, right after the San Francisco earthquake, have we seen anything like it. And typically when you have a panic, it runs its course, and then the economy comes out pretty sharply.
Right.
This time we had the Fed add a lot of new money to the system. That helped the panic end even faster.
Brian, a lot of important indicators are coming out this week. We have unemployment rate, inflation, home sales. What are your thoughts on these numbers?
Yeah, I think just like we've seen in the last couple of months, we're more likely to see surprises to the upside above expectations. In fact, just like we've seen with earnings this last quarter, than we are to the downside. Our forecast, I guess the one thing that stands out for me this week for the employment report is that we think we're going to lose a little less than 200,000 jobs, 190,000 jobs. The consensus is for losing another 300,000. If we're right, I think that will continue this rally toward the end of the week.
But that 9.6% number has still got to give you some cause for concern, right?
Yeah, we are saying that the unemployment rate will go from 9.5 to 9.6, but the interesting thing there is that the momentum of the unemployment rate is beginning to slow down. I still believe that we will not break 10% in this cycle, that we will actually start heading down in the unemployment rate before it cracks 10%.
When we're looking at these numbers, what came out today, the manufacturing number and some of these other numbers going forward, we're having a lot of people who've been on the air here today saying this seems to be indicative that things are finally starting to settle down, that they're starting to bottom out. Do you agree with that assessment?
Absolutely. You know, I believe, are going to have 3.5%, 4% real growth in the second half of this year.
And that will be fueled by what?
Yeah, there's three things. The Fed has been very, very easy. Number two, the panic that we lived through is ending, and it's ending pretty abruptly. And number three, I think this is a key thing. Mark-to-market accounting was reformed last March, which that was one of the key reasons for the panic to end.
Right.
Because what it did was it stopped the erosion of bank capital, and we're seeing that. Yield spreads are coming in. Confidence levels are beginning to rise.
Right.
Housing has begun to pick up. I think we're seeing this in lots of different areas. So I think the economy is going to grow strongly in the next 6 months.
And Brian, quickly in about 15 seconds, you're seeing that risk appetite return?
Absolutely. That's why the market's up so strongly. By the way, I think the market's still undervalued by 40%, so we have a long way to go.
Brian Westbury, chief economist from First Trust Advisors, joining us from Wheaton, Illinois. Brian, thanks.